There's so much chaos out there today in just getting information because of the media, social media, influencers that once you click on all their stuff so they can make money and blah, 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 it just gets crazy. And to me, that's not what I want to do. I want to give you basic information so that way you can make the best decision. So today I'm going over my monthly market update for August, and we're going to talk through interest rates, inflation, inventory, how that could impact everybody, but also how it could impact everybody here in Phoenix. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. So guys, this podcast format, as always, I'm here just to straight talk with you. That's why it's called Real Talk, is I'm trying to just shoot straight. Because the way I build my business is just being honest with people, being transparent with people. It's not having an angle. It's not about trying to convince them of something. It's like, listen, I'm going to give you information. You make the best decision possible. Because that's the way it should be. I shouldn't be trying to convince somebody to do something. It should be, hey, here's the information. Take of it what you will. I'll give you both sides. Again, like I talked about, like the whole clickbait stuff, there's just so much stuff out there today. It's just about clickbait. And I'm trying to stay away from that because it's not about being clickbaity or trying to get people to do something. It's about just giving people information, being a resource for them. That's what I want. So today we're going over our monthly market update. We're going to start the same place we start every time, is inventory. And I've got all my files pulled up here so that way I can pull everything up. If I have resources, I'll put it in the description. I got a comment on one of my videos. I forgot to put just stuff in there, so I'll make sure I'm doing that moving forward, and I'm going to go back to that person and enter that information. But anyway, inventory. So when we're talking about inventory, we've actually seen it decline, which is interesting. And it's not good or bad, I guess. It's interesting of why. So last month, we were just under 26,000. We were like 25,800, I believe. This month, we're around 23,800. So we've come down 2,000. So people go, oh, is demand picking up? Not necessarily. It's a combination of people still buying, and we've seen maybe an uptick, and I'll show you some, I can't talk today. I'll show you some stats from the Cromford report. It shows you there is a little bit of an uptick, not a ton, but a little bit of an uptick in what people are doing. But we're seeing some positive signs. So it's a good thing. So inventory coming down is also from people just canceling their listings. We're watching a lot of people cancel their listings. So I'll throw this graph up on the screen. You can see it. This is from the Cromford report. And it's talking about listing success rate. And what we're seeing is, obviously, the beginning of this year, we had a very low success rate. And then it came up once we got into February, and it stayed, and then it's been going down, and now we're going farther down. Now, part of that is the summer here. It's hot. July's pretty slow. December's pretty slow here in Phoenix. It's hot, and then in December, we've got Christmas, all that stuff. So, to me, it's one of those that December is pretty slow, but we've watched a lot of people cancel their listings. And so they're saying, oh, I'm not getting the price I want. I'm not going to sell the house. Okay. And we're seeing a lot of people do that, where they have unrealistic expectations, where I'll offer on a property and it doesn't matter the comps, they're just holding to a number. And so we're seeing some of that where people thought they could make something and they don't understand the market. They weren't, either their agent didn't explain it well, or they just don't understand or can't comprehend what the market is. It's a buyer's market. They have the leverage. They're going to negotiate. Some people don't want to do that. And some agents don't know how to do that. So that complicates the matter, because we have a lot of agents that are inexperienced. So they don't know how to handle conflict and resolve all of this kind of stuff to help people achieve their goals. So it's one of those that we see that stuff happening, and it's kind of interesting. So as far as, let's talk, so that was inventory. So it's come down. Okay. 25,000 is what we want it to be around. So we've come down from that. Let's talk now about interest rates. So interest rates actually came down today. Show you this chart. They were up at like 6.7. Now we're at 6.57. So just today it dropped, and you can see the drop on that chart, and that's conventional. If we want to look at FHA, VA, which are about the same, or not the same loan type, but the same around interest rates wise, they're about 6.19. They also went down. So that's a good thing. Now, some people go, well, hold on a second. The Fed said they weren't going to lower interest rates. And you're right, they didn't, because interest rates for mortgages don't follow the Fed. They follow the 10-year Treasury. So that's where it's not a perfect science. But typically the way I look at it is typically mortgage interest rates will come down before the Fed lowers the interest rates, because they pre-bake it in. And my effect is what the 10-year Treasury does, because like the next meeting for the Fed is in September. They'll probably lower rates in September. So I think we're going to see rates slowly come down the rest of the year. Hopefully we can be in the low 6s for conventional, and then we would be in the high 5s for FHA and VA, which would be good. It brings more buyers into the market, because right now we're seeing the market slowly decline. but we're not seeing it crater, nothing like that. But again, people don't want to buy homes that they have to do a lot of work to unless they get a good deal. They'll buy homes that are ready to go, done, and move from there. So that's where it's an interesting dynamic. So interest rates coming down, that's a good thing. Let's talk about inflation. And there's some different information on this with inflation, like which inflation are you looking at? CPI, or are you looking at core inflation? CPI is Consumer Price Index, which takes into effect everything. It can be more volatile. Then you've got, and I'll put something on the screen. This is from Perplexity AI, which describes it a little bit. So I'll put this up there so you can see it. But then like core inflation removes the more volatile items to where it's going to be a more stable number. And so what I'm going to show you here is there's a chart that we have here in the comparison. And what you're seeing is, there are going to be two different numbers. You have Consumer Price Index, which is up near, or not Consumer Price Index, sorry. CPI is at 2.67. Then you've got core inflation was at 2.9. So we've come up a little bit, not much. When we look at those, there's another chart that shows that you've got, core inflation here. I'll show you these numbers here. Core inflation stayed about the same. We've been around 2.8, 2.9. Okay. We still want to be closer to 2%. So that's still, we would want that to come down. But when we look at CPI, Consumer Price Index, you can see like in this chart, January 3%, then 2.8, 2.4, 2.3, 2.4, up to 2.7, because it's a more volatile number. So those numbers are going to fluctuate over time. A lot of that has to do with tariffs and the different things going on with that. And I think we're going to see that keep ironing out, especially here in August. I know that was the deadline for some of that stuff. So I think by the end of the year, we'll see that kind of ironed out of what the impacts are going to be as more data comes in. But I wanted to at least give you that information. I'm not an expert when it comes to inflation by any means, but I'm trying to give you information to see what that looks like, because I know it's all over the place, because it gets politicized and people take it each way and all that crap. But let's talk about the Cromford report real quick. So Cromford report, it shows a more positive sign in the market, which is a good thing here in Phoenix. So here in Phoenix, as I talked about the inventory earlier, as you can see in this chart, again, anywhere between 90 to 110 is a balanced market. Above 110 is seller's market. Below 90 is a buyer's market. Now, reality is Paradise Valley, Chandler, those might be the exceptions. Everywhere else is pretty much either balanced or in a buyer's market. You can negotiate. Things aren't flying off the handle. There might be certain situations because of the way people price things that homes go faster. But overall, what we're seeing is most of these, besides Chandler and Paradise Valley, everything else is maybe slightly balanced or buyer's market. I think they're a little behind a lot of times. But you see all these green arrows where the numbers have gone up. This is the most green arrows I've seen in months. So it's a positive sign where we're seeing, okay, there are some buyers coming. And that's where it's a matter of, I talked about people canceling earlier their listings. It's a time for patience. People got so used to over time with the super low interest rates we had for years of, man, my home sells within 30 days. That's not normal when you look at history. A normal market was, it's going to take you 3 to 4 months to sell your house. And we're starting to go back to that, and people just aren't used to it. They're not understanding what's happening, and so they're kind of freaking out over some of that stuff of my home sitting, oh no. And it's like, all right, guys, I understand why you're freaking out a little bit, but we have to be patient in this market. And that's what you're seeing is like, when I was looking at some of the numbers, I'll throw them up the screen if I have them. When they actually were looking at like, what am I trying to say here? It's the growth of equity. Like I think Phoenix was like 0.06% or something. So we're not negative, but I think by the end of the year, maybe we will be slightly. But most markets are seeing slight growth. There's a couple cities in the negative. I think like Tampa was one. I think San Francisco and Dallas were the other two. But it's one of those that we're seeing slight growth still. So it's not like, the bottom's falling out. But people just got to be patient. And that's the thing is buyers, have your pick of the litter. Be picky. Do what you need to do because you can find the right house for you and get the right deal. I tell all of my buyers that. Don't just find one house and go, I have to have it. Like, no, be picky because that will give us room to negotiate and get the right deal for you. So it's one of those, if you're thinking about buying, selling, investing, whatever it is, I'd love to have a conversation with you because it's about what's best for you. I work real estate through relationships. It's more about the relationship than the transaction. I want to know what your goals are. I want to help you achieve those goals. And like I tell buyers right now, be picky. Take your time. Sellers, be patient. Be willing to negotiate. do certain things in your house. I've got other videos on that stuff you should be doing to your house to sell it. So if you have questions about that, my information is below. I'd love to talk with you. I'd love to have a conversation, create a relationship with you. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.